Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to just do a step-by-step overview of what to expect when doing a real estate deal from start to finish. Now, if you use the internet as your prime source to figure out what you're supposed to do, it can be very overwhelming whether you're using Google or ChatGPT. So I'm just going to do a quick search using ChatGPT and ask, what should I expect when doing a real estate deal, and we'll see what answer we get. So what should I expect from start to finish when doing a real estate investment deal? And I'll put enter. Okay, so we got a pretty comprehensive answer, and I think this is a pretty good answer. But if I'm a beginner and I read this, I think I would be overwhelmed. So what I'm going to do is just kind of give a summary that's a little bit simpler to understand, and so that you have an idea that if you're going to engage in the real estate investing, what to expect. All right, so I've kind of put together a little flow chart of what would you would be doing. So the first thing that you have to do and be engaged in is marketing. And this is the hardest part of doing real estate investing. Finding the property and finding the deal is the hardest part of real estate investing because you're not buying any property out in the market. You need to find a deal. And there's a saying that if you find a good deal, the money will come. And if you have money, it's almost like a license to do bad deals if you're not, educated in how real estate investing works. So this is the hardest thing out of everything. And the main three methods of marketing that I'm aware of is sending letters to prospects or potential sellers, doing cold calling, and so you maybe get a list from online of people who may potentially sell. You call them, say, hey, I noticed you have a property at 123 Street. Have you ever thought about selling? Another one is driving for dollars. So what does that mean? Driving for dollars means that you go into random neighborhoods, and ideally you'd find ugly property in a good neighborhood and try to buy that from a seller. So that's what driving for dollars is. Now, I haven't done cold calls, but I have done driving for dollars, and I've sent many letters. And in my experience, sending the letters is the most effective marketing method that I've used because I got a lot of callbacks, or I got a lot more callbacks. It's not as tiring as driving for dollars. And I've done deals, or I've done a deal using sending for letters or sending letters. So the goal of this stage, which is the hardest stage, is just making sure that you get people to call you or you're able to reach a person, right? I like sending letters because it's not that hard. You just either you do it or you get someone else to do it, but just as long as you send many letters, you'll eventually get phone calls and you'll do deals. All right. So the next one is that yes, you get that phone call, you negotiate the deal, and then you sign the contract. And basically, you're going to talk to the seller, explain to them, hey, why do you need the property at a certain price? So they might be thinking, 240,000, and you have to explain, hey, I can only do that 215, right? And if you can do that, then you're good to go. So from here, the next step, and this could vary based on what adventure or path you take. It's basically choose your own adventure at this point. Is that you could just actually just make money here without fixing or flipping the property, right? So there's something called wholesaling. If you're not aware of it, is that if you have a great deal, you could sell that deal to other people. You basically do an assignment of a contract, and then another fix and flipper, who does not want to make the effort to find a deal or who's having a hard time finding deals, will essentially pay you for your deal if your deal is really that great. So, for example, let's say I have a fix and flip where the potential profit is $100,000, then and I have that under contract. Well, what happens if I don't want to actually do the work to do the fix and flipping? I would just sell it to another investor. That investor gives me $10,000, and that investor would also only get a potential $90,000 profit. So Why does the profession of wholesaling exist? It's because finding a deal is incredibly hard. It's the hardest thing in real estate investing, not construction, not doing design, but finding the deal. You find a deal, the money will come. And if you don't have a good deal and you have a lot of money, then you're going to end up like Zillow or Open Door, where they lost more than 800 to $1 billion in a year. All right. So let's say you don't wholesale and you continue with the deal. Then you would go ahead and fix up the house if it's an ugly house. And you would go ahead and it's kind of like one of two options. You're either going to sell and that'll be the end of it. You know, you have nothing to do with the property. You fix it up and make a, I don't know, $50,000, $100,000 profit. Or you could just fix it up and hold it, and that you would essentially be a landlord. And just be aware that in general, if you're a landlord and you have debt on a property and this is substantial debt, it's very unlikely that you're going to cash flow, or your cash flow is going to be very low. So just kind of be aware of that. I know I put zero cash flow right here, but you might get a couple $100 in best case scenario. You certainly don't want to be in a negative cash flow position, but as a landlord, you would get the rent and you would get a little bit of money today and appreciation in the near future, as long as you hold it, right? And then there's going to be a time that you will end up selling, or you might, well, who knows, you might keep it forever, but you might end up selling and then just get the benefits of the appreciation. So several strategies that you can go on from there as well. Now, there is a strategy where you could kind of get the best of both options, where you're going to be a landlord and sell the property with that intention. So there's something called a lease option. So I don't know if you ever heard of an option, but basically this comes from the financial world. So if you ever heard of stock options, it's exactly the same thing. A stock option is you pay a certain price so that you can buy it in the future at a certain fixed price. Same thing with a lease option. Basically, with the option on a house, you would pay a certain price, maybe $10,000, so you can buy it maybe 1 or 2 years in the future at a certain fixed price, whether it's $200,000, $250,000. It depends on what you negotiate with the seller or the buyer, whatever side you're on. So another thing you can do is just say, hey, anybody, I only want people who want to rent out my property, but are looking to be potential home buyers, right? One of my mentors, that's all he does. Like, he doesn't just rent houses, he just does a lease option. And he just makes sure he gets that. I think he's in an area where the property prices are a little bit lower. So maybe like a $5,000 option, they rent it out, and then 1 or 2 years later they can buy the house. So two things can happen from this. So if the buyer decides that, hey, I actually do want to buy the property, then as a landlord, you're going to be forced to sell, and then you have to get another property, but at least you get a big payday. However, if the deal fails and the buyer doesn't actually buy the property, that's actually probably better for you, because you get this nice option payment. Usually, I think it's like 1% of the price, but it depends on what you negotiate. So you get a nice down payment essentially, and it's pretty much unrefundable unless, I think, maybe you put in the contract that's refundable. Speak to a lawyer for confirmation about that. But basically, if the deal falls through and they don't ever buy the house, then that house is essentially, or the down payment or the option payment is non-refundable. So in reality, like, I think you win both ways, right? You either get a big payment and you lose the house essentially, but again, you sold it, or you don't sell the house, you get the rent payment, and then you get a nice little bit of option payment chunk change, right? So essentially, that's how a real estate deal would work, and you just have to repeat this over and over again. So again, the hardest part of doing the real estate investing is finding the deal. Everything else is just like icing on the cake. I know nothing about construction, but I have pictures of a house that looked really ugly, and then 2 weeks looked really beautiful. And I still don't know anything about construction, because as an entrepreneur, you're basically a leader. You're finding other people who are smarter than you in whatever field they're in to help you, achieve your goals, right? So as a real estate investor, you're going to hire people who are more smarter than you, let's say in construction, so that you can, refurbish or redo or fix up a house, right? So yeah, so this is pretty much it in doing the deal. This stage marketing is going to take up most of your time, and that's a lot of people don't really expect that, because a lot of people think that most of their time is going to be spent on like identifying uh, you know uh, areas of improvement with regards to construction or something like that. But most of your time is going to be spent on marketing. Okay. All right. So this is Korean Atlanta Mentorship. Just before we end this video, I just want to plug in our group. If you're interested in joining our group, go ahead to the About section of the YouTube channel, send us an email, say, hey, I'm interested in joining, or you can click the Google form link on the deals page below. All right. So have a great day, and we'll see you all next time.